The move in gold and silver prices was not substantial, but nonetheless, the metals are positioning themselves up for something much greater down the road. We're going to talk about it in this video as we explore. That's right. What happened today is really much sets off the course for what we're going to see the Federal Reserve do, and the precious metals are reacting. And it's not so much the moves they make today, but it's what they're beginning to do to take a stand in their move forward through the rest of 2025 and into 2026. And this makes me more bullish than ever before on silver, especially through this time. I'm going to get into it as we are getting to the winding down the day as the markets begin to close. Well, the precious metals have made a move. Before I get into that, I want to remind you of channel sponsor Summit Metals. They are a great company with excellent customer service, fast shipping, and a widening selection of products. You may have seen some of my shorts showing some of the collectible silver they have been offering us as well too. So they're expanding their market for sure. So check them out at summitmetals.com. So here's where the metals stand right now. A very small move for gold today, but it is going up a little bit. It's up $4 today to $3,347.70. That's a 0.12% rise in the price. Silver's up over 0.75 of a percentage point, far outperforming gold here, even though it's not as much here. It's 29 cents up. It did reach over $38 briefly today, but it's now resting at $37.95. Platinum is also up $12. Palladium is the only metal that's down. It's down $19 today. Even rhodium had a move here. So we have some new data that has been released by the labor statistics, but we see that gold has moved little following this fresh U.S. inflation data. Essentially, that is bolstering the likelihood of a Federal Reserve rate cut in September. In fact, that is really what we're talking about here, is the rate cut likelihood has now increased pretty dramatically here. If we look at the Fed Watch tool, as I record this video, we are seeing the Federal Reserve likelihood increase as the day has gone on. It went up over 90%. It is now sitting at 94.4% chance that the Federal Reserve is going to lower rates by a quarter point. No one is saying a half point. That would be a big surprise if they were to do that, but nonetheless, that is a pretty big deal here. So the Bureau of Labor Statistics showed that the U.S. Consumer Price Index rose 0.2% in July, which is in line with expectations. According to analysts, this inflation reading gives fresh ammunition to those betting that the Fed will resume rate cutting as soon as next month. Overall, inflation is not rising as rapidly as expected, likely because nominal growth remains sluggish. For the Fed, July CPI data likely cements a September rate cut, according to Neil Dutta of Renaissance Macro Research that has been mentioned in a note. In essence, this inflation print supports the narrative of an insurance rate cut in September, which will be a key driving force for the markets, echoed Alexandra Wilson Elizondo at Goldman Sachs, which basically that solidifies this notion of playing it safe with just a quarter point cut here. And so that's likely what's going to happen here, according to folks over at mining.com. Now, the other thing that's buoying some of the prices for gold and silver to the upside is what we got with this crisis has been averted. When the gold prices dropped more than 2% yesterday afternoon after U.S. President Donald Trump confirmed that the metal would not be subject to tariffs, averting a potential crisis in the global bullion market. A gold tariff would have been especially harmful for Switzerland, a major refining and transit hub for bullion, due to the heavy 39% levy the U.S. had placed on its goods. The uncertainty surrounding whether gold would be tariffed caused U.S. gold futures to surge to a record on Friday. Not so much the spot price, by the way. Spot price was affected very little. And it kind of reminds me of what happened with the copper futures market. It surged to record highs, before pulling back after a while. And but yes, indeed, but gold really was pretty much always off the table. He said early on April 2nd that bullion would be exempt, likely, largely, and always exempt. But remember, there's been a lot of back and forth with the tariffs, been a lot of negotiation, and a lot of uncertainty, folks, and people feel indecisiveness by the administration, according to critics. And so that is what has caused the bullion prices to fluctuate pretty dramatically. And so this uncertainty has caused gold prices to go up here. Now, I'm delighted to hear the crisis has been averted, according to Ross Norman, an independent gold market analyst. It will come as an enormous relief to the bullion markets, as the potential for disruption was incalculable. So let's talk a little bit about these tariffs and the uncertainty surrounding them and inflation. Now remember, the Consumer Price Index is data that is gathered essentially through each of the 12 central bank districts on employment, rising costs of goods and services, and some of it, the core, and then the CPI, cover, one without some of the highly fluctuating oil and food prices to some extent, and energy cost. And when you take that into account, that really was where these numbers come into play. But in reality, that's not a full, accurate measure of inflation. Because what is inflation? Inflation really is the measure of the amount of dollars that are in circulation, printed, that cause them to lose value. And so they're conflating other data and other factors into the mix. Price changes are not necessarily inflation. In other words, if prices rise because of the supply chain issues, that's not inflation. And tariffs and taxation also on goods and services that can cause the prices to rise is also not inflation. Inflation is tied to one thing and one thing only, and that is the printing of money, the printing of these Federal Reserve notes, the debt instrument. And that's a huge problem. And they're still doing it, by the way. Yes, they pull back dramatically, but still they're increasing it again. There should be much more of that coming out of the supply chain, or the amount of in circulation, and the amount of money that's out there, the amount of dollars that the Bureau of Engraving and Printing have. And so that is something we have to take into account and consider. But nonetheless, the prices are setting themselves up. They're taking a stand right now, which that means to me, as silver is about to break over to $38 yet again, just moments before the markets close. It's up 33 cents now to $37.99 in the ask price. I think we're going to start to see a solidification of yet a new floor for both gold and silver, as pretty much, according to the Fed Watch Tool and all these subsequent meetings, there's likely going to be a move towards ZIRP, zero interest rate policy. And we'll see what happens. But, the numbers keep moving in that favor, with the next meeting on the 29th of October with a 60.5% chance now that they'll lower it another quarter point then. And then in December, well, it's going to be 49.3%. That's a move up to another quarter point rate cut. So it looks like things are aligning in that direction. And barring any surprise there, that is going to be good for bullion. Because whenever interest rates are lower, that provides less competition for folks to be able to buy other things that are where there's less interest that they can earn on them, because bullion does not pay any interest. It just exists. The prices are based off of the market because people look at it as a stable store of value over the long course of time, both gold and, yes, even silver. Silver, I think, though, is really in a good position because of its industrial uses, and its demand there is increasing. We're seeing an increased demand, and which means lower supply. We're seeing stress at the COMEX and the LBMA. That is all good for silver, which means that at the very least, we're going to see a solidification of the floor right around where it is now. With some minor exceptions, I feel, this is just my opinion, that we could see the price go back maybe to $36 and change for a brief amount of time before recapturing that new support level. It is possible. There's a lot going on in the world, and anything can move the market in any direction, but I'm feeling pretty good about silver and more confident at my $41 revised for the second time price prediction by the end of the year. Now, what I like to do on this channel is give you my opinion as well as analysis and the latest news in the world of precious metals. I am trying to grow the channel, so I hope you will consider subscribing, but not only subscribing if you haven't done so already, but I'm looking to get more daily viewers. I do post content daily. Would love, if you want to stay informed with the latest happenings. I'm not perfect, going to get some things wrong, and I'm going to try to be as punctual in that news, but hope you will follow me, because I enjoy also learning from you as well. So I hope you will consider watching daily as well. Your viewership is what matters the most, but I appreciate the subscribers. If you do care to subscribe, let me know in the comment section down below if you've subscribed to the channel upon hearing this video. So with that being said, I hope you enjoyed this video. I would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.